Hello, this is Jordan, and this is your Precious Metals video market update. This is being recorded on Wednesday, January 16th, 2019. And in this video, I'm going to discuss the immediate status of the precious metals sector and where it lies within a larger context. And starting off here, I want to talk about fundamentals and the fundamental catalyst for what has been many great moves in gold stocks dating back over the last 65 years, and that is the end of Fed rate hiking cycles and the start of their cutting cycles. So between those events, I counted 13 cycles over the past 65 years, and in 11 of those 13, the gold stocks made an average gain of 146%. And the start of the advance, the data is a little bit scattered on this, but if you look at the average, it tends to be 2 months after the last hike, and then the median was 3 months after the last hike. So it's generally the average is somewhere in between the end of the hike and then before the cut. So it's interesting because the move, in most but not all the cases, the move starts before the first rate cut, but it's the key is the rate cut. And that's really what signals that easy monetary policy is coming, and that's what starts the move in gold stocks. And I believe we're setting up for that again, given the larger context as far as the macroeconomic situation. But what we should know is that the best moves began in 1960 and 2001. And if we're looking at current valuations for the sector, as far as how they compare relative to assets, their price to cash flow, price to sales, etc. Around the time right now, there's only a couple comparisons. There's the beginning of 2016 or the end of 2015. That's an obvious comparison. And then there's the late 1950s and the year 2000 or 1999. So valuations, in other words, valuations right now are very similar to where they were leading up to that 1960 move, and also that move that started in 2000. So if the Fed does cut rates and they go on to cut rates several times, I mean, that's setting gold stocks up for arguably a period where they should do well more than the average gain over the next several years. Now, the downside is, if the Fed does hike at some point this year, then obviously they're not done hiking yet. So that's the bearish side that we have to consider. But I'm leaning to the bullish case. I think they're probably done hiking. It's just a guess. But based on that, I think at some point this year, the gold stocks should begin a bull market, which leads me to this next chart. And the gold stocks and precious metals, for the most part, they're still in a downtrend. They're in a long-term downtrend. They're not in a bull market yet. And just look at these charts here of GDX on top, GDXJ at the bottom, with the 400-day moving averages. And it's quite clear. I mean, you look at, let's just focus on GDX, and you look at 2012 through 2015. The 3 or 4 biggest rallies got stopped at the 400-day moving average. And the 400-day moving average, if you look at the end of 2016 and that December 2016 low for both GDX and GDXJ, it kind of, more or less did provide support there. But then once we got into 2018, yes, it was kind of a sideways move, but it was slowly trending down, not in a steady fashion, but we could say it was in a slight downtrend. You look at GDXJ, I mean, 3 times at least in 2018 it rallied up to and peaked at the 400-day. For GDX, it rallied above it a few times there from the end of 17 into 2018. But in the middle of 2018, before we saw that big crack in the summer, the miners failed at their 400-day moving average. And so what happened to this recent move? Well, it rallied right up to the 400-day moving average. And if you look at the far right of the chart, it zooms in on the last, the daily candles from the last 3 weeks or so. And what we see is that the miners failed at resistance, which is okay. I mean, we're only looking at the very short term here, but they failed at resistance. So the long-term downtrend is still in place. This is not a bull market yet. And also, I'm not going to put it on another chart because I don't want to babble on and on. But if you look at things like breadth and momentum, how are the gold stocks performing against gold? These things do not imply a market that is immediately ready to go into a bull market. They imply that we're going to see more weakness or probably more sideways action. They're telling us that a breakout into a bull market is definitely not imminent. So we've seen a lot of good things in gold stocks and also in gold. I mean, it's doing really well against foreign currencies. It's broken the downtrend against the stock market. Good things are happening, but we have not seen enough to put the sector into a bull market. And fundamentally speaking, you go back to the last slide, I think the key is the market needs to be certain that the Fed is done hiking rates. And I think when the market gets clarity on that, we're going to see precious metals move a lot closer to getting into a real bull market. Because again, we're not in a bull market yet. And moving away from the gold stocks, just focusing on silver. These are silver's mega bear markets. Of course, 80 to 86 there in red was the biggest one. The other ones were not quite as bad. We put these on the scale of the this current bear market, and the current bear market has been the worst as far as time. And I should note the current one's in black, although there's a couple weeks worth of data I haven't put in yet, so this chart is slightly old, but still relevant, of course. But what we've seen in silver recently is there is a potential double bottom there in this big long bear market like it had in 80 and 86. And so if we look at the other three mega bear markets, in two of them silver rallied about 90% in the first 12 months after the mega bear market ended, by my own data here and my own count. And the other one was about 65%. I think that was the one in blue there. So that bodes really, really well for where silver is here and now. And look, if the Fed's going to cut rates, we're going to get a bull market. The valuations and tell us that it's more likely to be a pretty good one in the order of 2, 3, maybe 400%, not just not a smaller one or a little one. And that's going to be good for silver. In that context, yes, silver should absolutely rally 90%. Maybe it'll rally more. So, and also I'm going to make a chart of platinum because it gives us another precious metal to look at, but it's very similar to this, looking at platinum's mega bear markets. So yeah, I mean, the takeaway basically is, we're not in a bull market yet, but we're moving much closer to that point. The short-term, maybe medium-term trend looks like it could be down or sideways. But if the market senses and gets clarity that the Fed is done hiking rates, we have to put ourselves in position to really take advantage of that, because going into the end of the year and into 2020, that could be or it should be a fabulous time to be investing in this sector. And please check out my work at thedailygold.com and consider subscribing to my premium newsletter. It's only $149 for 6 months. You can find that at thedailygold.com/premium. Our focus is market timing and stock selection. Let's get into the best stocks at the right time and use a disciplined approach as far as trimming positions when they're profitable and cutting losers when they don't work out the way we hope. But look, guys, with the way things stand, the months ahead could prove to be the start of some historic profit opportunities in this sector. I really honestly believe that. Thank you all for watching the video, and I look forward to publishing another video update for you in the weeks to come.